All right, good morning, Quant, everybody else. We got a lot of charts setting up, looking good. John, good morning. Of course, those signals don't have to lead to setups, or maybe the setup has already played out in a previous session. And that is our job to figure out. 9:16 in the morning, we've got about 15 minutes to the New York Open. Elite, good morning. Polly, good morning. We're going to look at some signals, what those signals tell us to look for today, see if it's already done what we were looking for today, and then we'll look to execute, hopefully, after the New York Open. Letting some people flow in here, and we'll get going. Feel free to come in, say hello. If you have not already, do me a favor and like the stream. It does help a lot. Thank you. All right, we're gonna get going. A few more seconds here. Easy, good morning. All right, ladies and gentlemen, good morning, good afternoon, good evening, wherever you are in the world. I hope you're doing well. Just as a reminder, I'm not a financial advisor. This is not financial advice. Information on this channel is provided for education and informational purposes only, without any express imply warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. Cool, I've read it. We're starting out on NASDAQ as always. Looking for the signals. Hopefully those are going to lead to setups before I keep going. Can everybody hear me okay? Can everybody see me okay? Hopefully there's overwhelming. If you can hear me, type 1. Want to make sure that everybody can hear me before I get going, because every day there's someone that says volume is not good. All right, looking good. So starting out on the NASDAQ, we've had multiple days of decline, okay? So evolution of a template, the market starts making lower lows and lower highs. It doesn't have to, do the whole full-blown follow through all the way back down to where the move began. That's not always going to happen. But we've identified a market making lower lows and lower highs, and it's basically came off of the high of the previous week. All right, so it started coming back down. And I think I actually said this during the live stream yesterday. If it fakes out, we might get a first green day or something like that. So we've been coming back down for multiple days, and then we have a day that is opened. It actually gapped down, opened, tried to go lower and failed to do so, and then closed above not only the open for that day, but kind of a bonus. We closed above the previous day's close, and also the lowest close within this current week, which was also last week's close and all of that. We closed above that. We actually triggered previous day's high. This was a very good first green day. As far as like quality of a template goes, very good first green day. And then now coming into the session, whenever you have a first green day, on the following day, then looking for the follow through of this move. So a day that has triggered previous day's high and pulled back into the Asian session. I don't know if something happened last night that, has started this move or whatever, if there was news. It really doesn't matter. The most important thing is on this day, we already have a higher high. They've pulled back. We get the engulfment. This is a 15-minute chart. And then if I was trading later sessions, they've triggered previous day's high, breakout, bottom or the top of a box becomes the bottom of a box, breakout, pullback, engulfment, continuation. So there was two opportunities, it looks like, Actually, this is just after the end of the session over here, but got some continuation and some follow through. As far as actual setups that I would be looking for today, I'm probably not going to be looking for a reversal necessarily. The whole setup for this was first green day. We trigger previous day's high, pull back, continuation, trigger the previous day's high and pull back, continuation. So this was the setup. This was the setup. And then now we're just kind of floating up here. The only trade that I would have normally been looking for would be the reversal back to previous day's high, but they broke out. They already pulled back to that level, so I probably wouldn't look for that. Okay. We'll see. I think there's some better options, so let's go and explore those. Okay, US 30. Again, this is a very, very clean, very, very good looking first green day template. We had a peak formation put in place from last Thursday. I think that started the move down, right? Or they continued the move down over here on Friday. And then we get back down to the low of the previous week to begin this week. We gap down to that area. And then so we have a day that has opened, attempted to trade lower, and failed at the extreme. So at previous day's low, also the low of the previous week. And then not only did we close above the open for that day, but we closed above last week's close. We closed above really the most important thing, the previous day's close. So this was another very, very solid looking first green day as far as the appearance of the signal day. It looks very good. So coming into today, they did not, the NASDAQ, it did not trigger the previous day's high on US 30, kind of like the NASDAQ did. But today, we did trigger the previous day's high, and we've pulled back. So we've got a high put in place. We've got the low of the day put in place. They've been working the low of the day, kind of putting in these lower highs. But we already have the higher high. So we've got higher high, push 1, push 2, push 3. If we start to get a strong breakout back towards the high of the day, I'd be willing to execute that. Okay, so we'll see. Let's see a 15-minute chart, or a 5-minute chart, excuse me. I'm not even going to speculate any further. I think that I'm just going to mark this up as I would. They did come down and put that slightly lower low in place, which is unfortunate. This. All right, so I think I'm looking for a solid breakout to go higher, back up towards the high. With the lower low, I'd still be willing to maybe, it really depends on how it opens, but the big setup would be the first green day, low of day. We've came off of the low of the day, of the current day. So this would be a trade going from low of day back towards high of day. It's also Tuesday. Tuesday typically expands the range of Monday. So this is the Monday's high. We've already expanded it, so, it is what it is, but looking for basically a retest of that high. Okay, gold. Gold hurts my feelings. It hurts the soul a little bit. Because similar to the indexes in how beautiful the first green days were, this first red day is immaculate. We have a peak formation put in place from last Wednesday. I get the little breakout, little W at the low of the week, first green day, and that starts the move up. First green day, breakout day 1 the next day, follow through off of that breakout day on Friday. Day 1 breakouts, day 2 breakouts. Day 3 longs triggered into the market yesterday on Monday, a day that is opened, attempted to go higher, and then failed and closed below not only the open for that day, but also the close of last week and the previous day. And then from that, it has pumped back up and given us this beautiful 3 peaks pattern at the high of the day and broke down. You're not going to find anything much more beautiful than this. The only thing is that the move already started. That's the most unfortunate piece of this, is the timing that things are occurring. 7:30, 8 o'clock in the morning, we've already broken down. Here's a slightly higher high over here. We've broken down into lower lows. So I'm still going to look for this to expand the range of Monday. I'm just going to have to wait for it to trigger previous day's low, maybe pull back a little bit, and then maybe we get the good rollover, or we break out of this and pull back. We'll see. I kind of want to check the 100 pip box as well. The way that this is first red day and then pop back up, and sort of this 3 push variant, and then gone back into consolidation. It looks very good. All right, we're getting the breakout right now. So let's take a look at the 100 pip box. Do we pop up in 3 clear levels? Looks like we've got peaks at or below. I would even say from zeros down to 50 makes the most sense. So probably in 50 pip increments from double zeros. 50, 50, and 50. So a very good, solid 3 levels of rise as well. And maybe even I could say, what if I only saw this as like the peaks down here? So let's measure it slightly different, for the sake of, if I didn't see it that way, maybe for anybody else that sees 3 levels of rise differently, we'll measure it like this: 50, 50, and 50, and that still gives you a really good solid strike zone for those 3 peaks at 25. Okay, so this is definitely one I want to be watching. We've got 2 minutes to the open, so I need to stop running my mouth and try and hurry up. Russell was another first green day that was very good. And again, this one actually has not triggered previous week's high as well, so I like this. The only reason I kind of am gravitating towards US 30 is because it hasn't made it back to the high yet. So we've got space to go from where we're at back to the high of the day. Oil, another first red day. Okay, we had breakout day 1 on Thursday of last week, immediately followed by a first green, immediately followed by a peak high at the high of the current week and a first red day. We've broken out. Bottom of the box becomes the top of the box, and that is what I will be looking for, waiting for, and searching for. First red day from Monday. Closed at its lows, breakout pullback. Looking for follow-through continuation to expand the range to the downside on a Tuesday. We might even be able to do one of these. Okay. Hopefully one of those theses plays out. If not, whatever. Okay, so I'm gonna put the NASDAQ up here top right. Really low expectations for this one. I do think that I want to have at least US 30 up here and be watching this. But I think my main focus today really needs to be gold and oil. I do think that it's very unfortunate that we've already broken down. But honestly, that just might make this the easier money. It's already a down move. It's already broken down. All I have to do is wait for a pop-up or some kind of pullback. Do my best not to chase, and we will see. 9:30, this is what the open is going to look like. Not a super volatile open. At least not yet. Ahmed, hello to you as well. Don, is silver setting up better than gold? Hey, so this is pretty... Is that the previous day's low? Yeah, this isn't bad. They triggered previous day's low. They popped it back up. They made a higher high on the day, but the high may have failed. And we've got a bit of a descending triangle looking thing going on here, hovering just above previous day's low. Yeah, this is decent. Tis decent. I'm going to butcher this, but Kanini, hello. Okay, first 5 minutes is looking decent. First 5 is looking decent. YM on the breakout. Only a couple of minutes into the bar. I guess 3. We're 3 minutes into the bar. Oh, you get a little bit of pen action. Okay. A little bit of volatility coming in. And I did point this out, but we did make this lower low right here at the low of the day. We've been compressing down into the low. We've been making these lower highs. And of course, that does not mean it has to go down. Yeah, silver is moving. And I've got silver up on my other screen. I've got it down here, but in fact, I kind of need to put... This is what we're going to do. I'm going to take the NASDAQ away. And I'm going to put oil up there. So now I've got gold and silver down low. And I've got oil and US 30 up top. And that way I can monitor all of them without panicking. You know, I don't want to freak out. Trying to watch too many things. Silver's got 34 seconds left on this bar. The only thing I don't really care for about silver is that it's kind of clunky. It's a little clunky. This was also a good, I mean, this was a good solid first red. You know, similar to gold. We've got the 2 days of pop up, try to go higher. And you got the first red. We triggered the previous day's low. Okay, I've shorted silver. This is going to be an opening range breakout. I'm expecting the second 5 minute bar should be just as big as the first. And we're looking for the low of the day. There's a lot of momentum on this on the 1 minute chart, so it should just keep going. If it does not do that, that is a problem. Also, this type of setup is meant and supposed to behave a certain way. We should be jumping down towards the low of the day. Okay, I've removed one of my contracts. And I'm at break even. Not going to lie, I'm up pretty decent. It's making it hard for me. It's kind of... That's what I'm saying about silver being a little clunky. It should be doing something, and it's in the process, but it's so clunky with the movements that it just feels weird. Is it going to expand the range on this bar? Is it going to pull back on this bar? And I'm up so much, and we're just hovering down at this low. It's making me honestly emotional to the point where I want to do certain things. Like, I want to just close it, but I'd like to see it blast through this low. And I'm at break even, so it's not like I'm risking anything. $51 seconds on this bar. If it just expands a little bit more. I just got to take it out. Bust out some shirtless diamond push-ups. That's not bad advice. I think that would have kept me from doing anything crazy. But I think I managed that very well. I'm very happy with that. I'm good with that. I shorted pretty much right at the close of this bar. The close of the 930 bar. And on silver, I was using minis. And we got it back down. Almost bottom ticked this bar on the first contract. On the second one, they popped back up a little bit and got me. Whoever called out silver, good stuff. Good stuff. This is one of those setups where when it behaves and it actually plays out, I have a strong feeling this might just keep going. I don't know for 100% certain anything like that, but on these types of setups, we might see a little wick up here, and that will help kind of confirm, but it should start jumping down. These are the kinds that when they come out of the previous day's low, we really should see it start jumping. Well, this is silver, so I don't know if this is gonna, as far as distance wise, but like on gold, when the setup shows up, they'll start jumping in 50 and 60 pip increments. And then it's shocking. It's like, oh my gosh, how is this even possible? But yeah, that's why he said that. I came to the screen and I immediately knew this. I need to watch this because uh this is what told me, like, for example, right? This is what told me to look for this. All right, so I've got this, which is a really clean, good first red day. And then we've got this, which is now completing part of my criteria that I need to see, or the type of day that I need to see. It's popped back up and consolidated just above the previous day's low, that's the setup. And this is the completion of that. This is what it's supposed to look like. Heck yeah. Which I think there was another one that was set up similar to that. This was still really good. And I really like this. It's just, it had already kind of completed a large portion of the pattern, right? So I felt like this was more probable for success. Okay, US 30 was looking for a potential breakout here. And instead of breaking out to the upside, which, to be honest, I really thought this bar was all the way up here at one point, and it was looking really good. And I was like, dang, this might be the one. And then it wicked down, and I immediately knew this isn't it. Either it's not ready or I'm wrong. It's doing something else, and I need to focus on something else, which I did, which is good. Oh, it was oil. Oil was really... Now, this is a really large move down, but that could just be an indication of weakness. It doesn't necessarily mean that the next day will reverse. But this is a really nice first red day. Let's see here. Is the low of the week down yonder? Low of previous week, excuse me. Yeah, it's down here. So we got a little space to fall. So if the market was aiming to get to, if it was aiming to get to the previous week's level, we've broken out. We've got peak 1, peak 2, maybe peak 3. If we see this start to break down, low of day becomes the bottom of the box. Previous day's low becomes top of the box for measurements. And then oh, wow. One full expansion would put us at the low of the previous week. So I don't even need this. I can just delete this. I've just deleted my indicator. Oh my gosh. There we go. Is my line still there? Yeah. Every time the market breaks down or breaks out, it goes sideways. Is it going to follow through? No, I'm not going to take another one. I'm telling you right now. I am not greedy enough or complacent enough that I am up this well for the day, and I'd be like, oh yeah, time to just take another trade. It would need to be perfect. It would need to be a setup that I look at and say, hey, this is extremely high probability that I'm not giving back any of this. Carlo, I get it, trying to analyze the macros, but personally, I have found that, there we go. Anytime the market breaks down or breaks out, it goes sideways. Pen hammer. And the drop. Beautiful. Beautiful, beautiful, beautiful. And I hope that someone was willing and able to hold on through that pin hammer. And I hope one of you just caught that drop because that was over and done pretty quick, right down through the low of the day. Beautiful. Good stuff, Nipsey. Can you look at BTC? Yes, I sure can. I've got oil up here. I'm going to leave that up there. I think I can remove US 30 for now. Ackman, good stuff. Heck yeah. What did you say, BTC? All right, let's go. BTC. We'll go to futures. Okay, Bitcoin breakout day 1, 2, 3, 4. Trigger previous day's low. Broke down, creeping trend, low of day. Bottom of box becomes top of box. That's the only thing I could look for. If I was trading Bitcoin, I would either be waiting for this to turn into breakout day 1 or this to turn into a first red day or something like that, and I'd have to wait until tomorrow. Now, it is Tuesday, and this is an opening range breakout, so, could we be looking at breakout pullback? Yeah, but I'd have to wait for that to actually, play out. Mustang, if oil goes to high of day and breaks out, would you think possibly, or probability-wise, it could chase yesterday's shorts? Hey, so it's not about Mustang. It's not really about what I think, right? Could that happen? Yes. Is that a setup that I'd be willing to take? Is it a playbook opportunity that I'd be willing to make? I look for first red day traps in an up moving market. Breakout to the downside, retest of a high that has failed and given us a first red day. This is not a breakout to the upside market. So I can't take that trade. The only trade to the long side that I'd be willing or able to take would be a first red day trap, but the criteria doesn't fit. It doesn't make sense. Gold reversal, 10 a.m. We're in a market making lower lows and lower highs. That's all I know. Could it reverse? Sure. I wouldn't be willing to take it though. That's what I'm saying. Back to watching paint dry. It was nice though that How's my heart rate? Even through this trade, when I felt like I just wanted to close, my heart rate was still fine. And I'm over 300 milligrams deep into caffeine. Was it pumping? No. No, that doesn't happen to me anymore, thankfully. Because it used to, like, in my first year of trading, or my first, probably, now it's within the first year of trading, my heart rate would beat so hard that I could feel it in my ears and my eyes, and it was just like maximum emotion. But now it's manageable. I think my mindset changed very significantly to I truly don't care if I win or lose. And that has made it easier to keep a calm head. Like, obviously I have to win eventually to make consistent gains, but one loss is not going to dictate. Do you have any friends that also trade? That's either a 3 or a 5-star elite. Because of the way that it was set up and the way that it tends to move on this type of trade, I put a lot more size on there because of that. Do you have any? So going back to this question, do you have any friends that trade also? None of my friends have any idea about trading. It can be tough. So my mom has been trading. My mother's been trading since before I was born. And then the person that got me into trading was my brother-in-law, and he still trades. But he trades mostly and mainly in crypto. Day trading as well as longer swings. But I sold at the low of the day. Yes, but it's selling not at the low of the day. We're hovering above, and we've got space to fall, and also with the expectation that they should, based off of this type of setup, we should be expanding the low of the day 25 to 50. There's a higher time frame reason for this trade, right? We've got a lot of room to get back down here. It just makes sense to put a little bit more on it, especially if it would have burst through and started jumping the way that it normally does. I kind of expected, we've got 930, 935. Something that, if you go read anything from Toby Crable about opening range breakouts, if you have the first 5 minutes and then the second 5 minutes is equally as strong as the first 5, there's a higher probability of success and in that direction and whatnot. So, anyways, yeah, I'm selling at the low of the day, but it's a different type of setup. The dollar is soaring. I saw someone say that. Sure is, isn't it? How do you manage your TP at any given day? So if I'm taking a trade, for example, this trade has came off of the high of the day, and it's a breakout trade, right? It's the trend after first red day. My first target needs to be the low of the day, which it was, which is good. If I'm coming off of, or if I'm in breakout and I'm taking a reversal setup or a counter trend opportunity to go back in this direction, target needs to be the top of the box, which becomes previous day's low in this case. If I'm taking a trade from, I just use the levels. All right. You can also do something that's even a little bit more, I would even say more accurate and more consistent. For example, if I were to look at this and say, you know, based off of this consolidation, where do I think the target will be or what should it be? I can take this consolidation and mark the high and low of that box and look for expansion targets. But a lot of times I think you'll notice that those expansion targets line up with levels. And that's how I do it. Are you still using magic keys? No, I cannot use it with my current platform. I don't use MetaTrader anymore. Which is a shame because I really liked that. That's the one thing that I really miss from doing like Forex and stuff, is that as far as like lot sizes and things, I could have entered in with 5 standards, and then it goes up a little bit, maybe 25, 30 pips or whatever, and I can click that little button where it's you can close custom, you can close half, and it will remove half the position size from every one of those positions that I have open. So if I have a one full standard, it'll go down to 0.5 on all of those. And I really liked that. I liked being able to scale in and scale out that way. And then obviously with a futures contract, it's first in, first out. I can't have half a contract. So if I remove a contract, it's gonna come and it's gonna adjust my average a lot. That's the reason that I liked it, is because I could scale out and my average entry wouldn't change. So I could manage the position much easier. I was getting stopped out at break even a lot less because I could keep my average entry away from current price. Okay, US 30 continuing to pull lower. We get that. That's what I would call a breakout fake out bar. All right, I'm not going to take this trade. We're making lower lows and lower highs. But this is a good example, I think, of a breakout fake out bar. Now, whenever this happens, my expectation, if I were to have executed this trade, I would be down here on a 1 minute chart, trading the break of the breakout fake out bar, or one of these lower time frame bars to enter, and then maybe adding in at the break of the breakout fake out bar. So it'd be like this right here. In fact, let me put a little line here. However, my expectation for when this happens is that it should be a flush. When we get down through here and we start closing lower, it should be a flush. It should just go through there and run, because if this is truly a breakout fake out bar trapping the longs, they're going to start to give up, and the market should squeeze lower. It should hit the stops. So if they bought this, they'll have a sell order here. They hit those sell orders, those pendings, and it accelerates the market down. And that's what should happen. So if we get down here, we start screwing around, I know that I should tighten up my stop and get stopped out. I don't let it go all the way back up here and stop me out. probably trade today with you all till about 10:30. Like I said, for anybody who's maybe just joining in, took that trade on silver earlier. Peak lows below the previous day's low after first red day. And the parabolic follow through. Okay, oil, instead of breaking down and following through, we're starting to get a little bit of a pop up. Getting a little pop to the other direction. And also for reference, this US 30 setup that I'm looking at, or was looking at, is the exact same one that I took here on silver, just in the opposite direction. And I would even say that the only difference, and probably why this is not working out, is because of this right here. We've got multiple retests of the previous day's high without going higher. Only place it can go is down. Whereas this was just a lower low and a pop-up and a consolidation and a breakdown and a consolidation and then a breakout back for the low. This was a breakout or a higher high that could have resulted in the same thing, but then it's tried once, twice, 3 times, and it couldn't get up there, which is probably why this is breaking down. Or a reason for why I should not be executing this. Now, if this would have, at the open, like I said, it looked like it was going to make a run. This bar was all the way up here, and I was like, this is good. This is really good. This is, the setup is playing out. And then I came back, and this is what it looked like. This was the close of the first 5 minutes of the New York session. It's like, nope, that's not it. That was a big fake out. That's not the one. It looks like things are starting to slow down, except for silver. I think silver, it's good to see that we're still potentially, completing that pattern. And if I was still holding on to this, my next target would be 25 to 50 pips outside of the low of the day. That's another target that I like to look at. This is go down. That's pretty far. Something like that. Wow, look at that. Well, would you look at that? Let's see here. What do they look like? Strong bars off the low. Still hasn't made a higher high. But it looks like it might be about to. Could be. Might be. We don't know. It's been a good week so far. Hoping the back half of the week continues to be as fruitful as the front half. And markets are starting to look a lot more. I won't say normal, but the timings are You can tell that the timings are starting to shift a little bit more back towards the New York session, which is nice. You know, these past, I would say 2 to 3 weeks. 2 to 3 weeks, the time in the New York session, things have been kind of strange. The movements have been a little odd. Not odd. It's just the real move that you're looking for based off of a trading setup. They've been happening either in like Asia or London, and then New York is trash as far as just, you know, you get the barcode price action and it's rough. Or maybe it happens in the afternoon session. So it's nice to see some good quality setups back in the morning session of New York. Oil has piqued my interest. Oh my gosh. I may have missed it. I don't know if this is a death candle or the ultimate trap. That's a pretty big down close bar. So the idea with this would be this is either a lot of momentum or we see this big explosive drive down that immediately loses that momentum, which would tell us that they're trapping shorts or that they have just trapped shorts in this area. But they've broken down now. Are they going to go sideways? That's really a big question. So they've broken down. We do have a sideways bar, which this sideways bar could be the loss of momentum. So we need to see it follow through. Okay, if this is the completion of the move, if this is the completion of a pattern, and we're going back to the low of the day now to continue this expansion down. We've broken down. We've gone sideways for a bar. Now we've gone sideways for 2 bars. This is an inside bar. Really need it to start following through. Have I taken any trades today, Beats? Yes, I took silver. And now I am watching and waiting to see if I should take or should it be taking oil. On oil, we were looking for, yesterday was first red day. We've got a breakout. We've got a pullback. Bottom of the box becomes the top of the box. We've got 3 peaks. We've broken back down underneath and was worried that maybe that was a trap, except it rolled back over. So now I am waiting for it to hopefully complete the pattern. Okay, we hit the high of the inside bar. We've hit the low of the inside bar. Are we going to now continue to expand down? Or is this the trap? I mean, this would be the ultimate trap, though. Think about how many we have telescoping acceleration, a big blow-off bar. If it loses momentum right here and accelerates in this direction, think about how easy it would be to hook all these people in. Joseph, hello. Mr. Harley, good to have you here. What was I saying about silver? I took the trade over here. Yesterday was first red day. They triggered the previous day's low. They popped it back up, broke down, went into consolidation, and then they, at 9:30, started to roll over. I took that trade back down towards the low of the day. Coming off, I got it just off of the low of the day. I sold it, or bought it back, I guess. Okay, we've got 15 seconds left on this bar. 15-minute chart. Honestly, this is looking halfway decent. You know, it's not the worst thing in the world. Actually, that's a new 15-minute bar right there, too. So we might be seeing the follow-through, if it's going to show up. All right, that's a big if. 15 minutes into the hour. Very nice, Nicola. Very nice. Motion of the ocean. Things pull back. They continue to expand. They pull back. We got one drive here and a second drive here. All they would have to do is put one bar back up, and everybody who just sold this low would be in trouble. Or this is a death candle. We've broken down. We've gone sideways. Really looking for it to follow through. All right, I've taken a small position, a very small position on oil. If I end up getting stopped out on it, it won't hurt at all. Now, I'm willing to add into it, but I'm going to be willing to add into it on the follow through. And I have a very tight stop. 0.13 points. So if they make a rip back up towards the upside, basically they've immediately lost momentum. I am going to get out. I'm going to get out. Okay, this is all on the inside of a 1-bar range. I learned a lot of stuff from him, Nelly. I mean, I learned the basics of everything from him, honestly. And he gave me, he used to spam books in his earlier stuff before he had made before he made his playbook. He was spamming, the books that he read. So I just read those books, and then I see, everyone has a hard time understanding him, but if you read the books that he's read, then it kind of makes putting it all together a lot easier. Yeah, Peter Brandt, sure. I didn't really get as much out of that, to be honest. I think that, I got stuff from it, but I got more from reading Edwards and Magee, Schabacker. I mean, that really gives you the basics, right? That's good. To be fair, I haven't watched any of his stuff in a very, very long time. Uh, but I would definitely say Toby Crable's book, and I mean, you can read trading books all day. They're not really going to help that much. But Toby Crable's definitely helped a very significant amount. And that's another one that he used to spam all the time. Talk about Toby Crable. But his stuff about opening range breakouts, and now I see, there's a lot of people trading opening range breakouts now, and a very large majority of them are doing it wrong. They think, oh, just mark off high and low, first 5 minutes, first 10 minutes, and you'll be good. Breakout, trade that direction. No, I cannot say this enough. No. That's just simply the person that not created, but used and developed and did all the research, and he's got chapters and chapters and chapters of, if you trade the breakouts these way, the different types of days, these are the results. He's got a ton of historical data, to talk about this and that, about opening range breakouts and the certain types of days in which they're most advantageous to you. You're not supposed to just necessarily, any day of the week, opening range breakout time. No. Narrow range days, contraction leading to expansions, and I think that if you want to learn about the different types of days, that's probably the go-to. Toby Crable. If you want to learn price action, I took a very, very large and significant amount learning about price action from Al Brooks. Reading charts bar by bar. You know, what are they telling you? What information is it feeding you? Like oil right now. We've got a very large 1 bar range, down close, followed by a loss of momentum. Very small pullbacks and ascending the lows higher and higher. They're trapping shorts. They're squeezing back towards where the move began. Now, of course, that can change at any time. But me sitting in here in a short position, I'm very happy to have my stops tight and a very small position size, because if they're going to squeeze back up and they're just going to fiddle and goof around and just wreck people, because now they've got this really big range, right? So the idea is people are going to put their stops right here. They've sold right here. That's really far. And then you get stopped out for all of this. I'm not doing that. I'm not doing that. My stop is, let's see. It's about right here. So I'm about to get stopped out. And that's fine. I don't care. Because it will do this. All right, I just got stopped out. I'm still up. Great today. We're good. They'll do this. I mean, this looks fantastic. I'm not mad about getting stopped out either, because this, I don't have any problem with the trade I just took. This looks like it is a death candle. We've left the volume up high after 3 peaks, and we are ready to complete the pattern. We are ready to complete the move. That's what this is telling me. But it immediately loses its momentum and starts squeezing back up. They're probably going to go back up and hit the stops again, which means that I'm just going to get stopped out for more if I put my stop all the way up here. I'm not doing that. I'm not doing it. I'll just get back in. I'll get back in on the reconfirmation or whatever. I'll take a smaller loss and just get back in. Why do I need to have my stop all the way up here? And then my risk to reward is going to always be like negative, right? I don't want to do that. I'm struggling with randomness. It's not random. That's it. That's the thing, though. Now, it's not random. It's overwhelmingly for example, if I take a blank chart and I say, hey, this is human psychology in a nutshell. It's a reflection of our behaviors laid out in a series of highs and lows. Open, high, low, close. It's us in chart form, in bar form. And that's why I find it so interesting, because this big bar coming back down, we've got a trading setup that we're looking for. We've got this big bar coming back down, signals momentum. We've got a bar that's opened barely any wick and closed. That's signaling strong momentum down. That's what it's telling me. But things continue to change whenever you get the loss of momentum. It's constantly feeding you information. Every bar tells you something. What should the market do based off of what it just told me? And then what is it currently doing? And then how do I react to that information? Do I need to execute? Do I need to sit and do nothing? I think that's where people kind of go wrong. It's not random. It's just you're responding in in the wrong way. Your reaction is not, is not. If I read a book from left to right, or instructions, right? And the instructions say, pull out these screws and screw them into these holes. And then I get to the end of the project and the table falls apart. And I'm like, I don't understand what happened. And I go back and I see, well, I put the screws in the wrong holes because I didn't read the instructions correctly. And then what do? Do I blame the instructions? Well, the instructions told me exactly what to do and I didn't follow it right, but then I just blame the instructions. Maybe I should get better at reading. Maybe I should, take another English class and figure it out. It's not the instructions' fault. Now, of course, if they're poorly written and whatever, but it's mine. It's my fault. These are your instructions. Follow your playbook. You have to have a playbook first, right? You have to be able to look at a chart and decide what is a setup and what isn't. No, it didn't. They had pretty good explosive moves down over here. It completed the pattern. It hit the low of the day. That's good. That's all you really need. It's just, this is a great setup. Back to the low of the day. Great. Now, realistically, this could have and has in the past started jumping in very large increments like this, where the bars just start coming down. Every bar is just a meltdown. And those are the ones I really like to try and hold on to. Yep, exactly, Ahmed. Yep. I think I'm done. I feel really good about today. I took the win on silver, which was a really good trade. Took a follow-on trade on oil, which it might actually still play out. It might just be playing games. Oh, I didn't read that correctly. I didn't read that correctly, Beats. My bad. Hold on. But how can you explain when you follow instructions and it still falls apart? Yeah. Because I think someone actually already said it. What is it? Nothing is 100%. Yeah, that's why. It's never going to be 100%. You can just read the best that you can and react the best that you can. It's never going to be 100% though. You just have to accept that. Just don't do anything irrational. When you stop listening to the instructions altogether and just reacting to every little thing that you see, that's when things start to kind of roll downhill. Yeah, and I think that it's just not mainstream. He hasn't advertised it in a way that, makes him more mainstream. Whereas, other, and it's, what it is? Is it's boring. My God, this is boring to most people, right? The market it's because it's not complicated. The market only does three things: previous day's high and low setups. like when you really narrow it down, right? Now you got to explain how to look for certain things at certain times of day, and you got to kind of, you have to give details about little things, or else none of it's going to make sense. But what sounds more interesting? The market breaks out and only does three things: trend, reverse, or stay in the trading range, or there's an algorithm and every little gap means something, and that's a order block, and that's an imbalance that needs to be traded into, and there's an algorithm that controls everything, and this, I can predict exactly what the market's going to do every single tick, because like that sounds a lot better, and that's what people want. They want to be capable of being in that much control. They want to be capable of controlling every single tick and every single bar. They want to know what's going to happen. So it's a lot more interesting to people, I think. Now, of course, this is all just my opinion. Do you want to be able to control every single tick, or do you want to have high probability instances that show up almost every single day with just a few basic understandings? It's never going to be like, oh, we'll just mark off the high and low of 930 and it breaks out and trends, and I'm going to take that trade every single time. That's not how it works. Or else everybody would be bajillionaires. But that's what people want. They want that level of simplicity. Because I'm telling you, I get YouTube comments all the time, especially on my, my more popular videos. And people are like, this is stupid. This is too complicated. Is it too complicated, or are you just not listening to what I have to say so that you can truly understand how simple it actually is? Or maybe I explained it poorly. That is honestly a very large factor, is I, in certain videos, maybe have explained something poorly, or maybe I left out a detail, or they just simply didn't get it, what I was trying to say, or maybe my vision for what I was just explaining wasn't coming across that way and they just didn't see it. Sure. Yeah. As time goes on, so all of these new concepts that you see come out, I'm telling you, all right, think about all of the setups that, I'm not going to name any of them because every single day it seems like there's a new one. All these setups that are coming out, all right, about how to trade this and that and these different concepts. And then go read Toby Crable's book. Go and read books from the 30s and 40s. Go and read the Taylor trading technique about the 3-day cycle. And you're going to be like, oh, wait, so this stuff has been out since the 30s, the 40s, the early 90s, the 80s, before then. All this stuff has already been around. There's nothing new under the sun. Why are my dogs freaking out? And that actually opened a lot of doors for me, because it was like, oh, I can cut out a lot of the noise, right? Whenever I realized like, oh, this stuff it's always been around, I just need to find the source. The source makes a lot more sense because it's not watered down with different names and garbage, useless information. Yep. And you know what though? So with a playbook, right? A playbook is a series of events that take place in the market. And whenever one of those events shows up, you look to execute. Kind of like any other activity that is performance based, whether that be soccer, football, right? For some of you, American football, basketball, baseball, any of those, right? Whenever something happens within the game, somebody's making decisions about what play to run next because it is the most advantageous to the team, whether it be through deception or whatever. They're strategically using those plays in order to hopefully get an upper hand on their opponent. Our opponent is these little bars that go up and down on the screen. All right, whoever's behind them, moving them, it doesn't matter who it is, whether it be the collective hive mindset we call human beings, institutions, hedge funds, moving this thing around, retail. It doesn't matter. That is our opponent. And we have to, whenever certain things show up and we have edge, implement and execute a play out of our playbook to hopefully gain the upper hand. And that's all it is. And that's where it's not a bunch of strategies and every time the MACD line crosses, I'm going to do this. It is performance-based. It is, and I can't think of the word right now all of a sudden because I don't know. I guess I need to wake up more. Discretionary. No one even said it. I just remembered. Good stuff. It's discretionary, right? That's a first red day. But today, is it actually setting up well? Fire movement, fire maneuver. Yep. All right, ladies and gentlemen, I've gone on a 15-minute rant about just about everything I think someone said one thing and I just started talking for no reason. I think it's been a pretty good stream, though. I'll see you all tomorrow, 9:15, same time. I'm trying to do these streams every single day. As long as people keep showing up, I'll keep doing them. Beats, they're not dumb questions. They spark conversation. Nothing wrong with that. All right, you'll have a good rest of your day. Oh, I got to get to my workout today. Let's see, what are we doing? I did squats yesterday. Mainly back, though. Squats and back. I'm hitting some decent numbers now. I'm getting back up into my pre-drill instructor day numbers. Feeling pretty good. Back in like 2018 or whatever. Squat, I'm just sub 400 beats, pounds, not kilograms, obviously. My last max was about 5 weeks ago, and I was at 385 with depth, full depth. So hopefully, I'm hoping to break. I just weighed myself yesterday. I'm 191. Again, pounds. Which is good. I tend to fluctuate. The heaviest I've ever been was 210. And when I went to the drill field, I was a drill instructor, and then I lost 50 pounds, and I just seemed to I really never recovered from that. I was down to 160. I think I even dipped into the 150s. And I'm 6'2". So it wasn't good. Being 6'2" and 160-ish pounds, I looked rough. Anyways, ladies and gentlemen, you have a good rest of your day. I will see you tomorrow, 9:15. Ready to go. Bye-bye.